Okay, welcome back. Today I will be doing an overview of the market, what's been happening over the past few days, what levels the market's been reaching, and what they've reacted from. So I'm going to focus on ES and I'll move over to NASDAQ as well. ES is of course S&P 500 and of course it is a correlated pair with the NASDAQ, meaning they move very similar. So with this, we can see that on the 29th and the 30th of July, market traded into the lower quadrant of the rejection block, which was on the monthly time frame. Okay, the rejection block is a wick on a candle, and the market can use that as a key level. And how I do it is, I figured out, of course, that the market runs through quadrants, and if we use the high and the low and put a Fibonacci on there, and of course use these settings, you can see that there's an upper level and a lower level, and the market then traded into the lower quadrant. Okay, this can be used as a key level. I want to also add, we had previous month low here, which ES did not take. If we move over to the NASDAQ, we can see previous month low was taken, and we also tapped a monthly fair value gap, digging into the slower one as well. Now this of course has created SMTs. SMT is basically smart money diversions, where its correlated pair is not correlated in that certain moment. Okay, so for example, ES has not taken the low, but NQ has. And one thing I want to add, that can also mean a reversal from that level. It gives a higher probability for a reversal if you get confirmation. But I also want to add is, notice how ES has not taken previous month low, but NQ did. This also shows that ES is the stronger pair and the market wants to move higher and further on ES than it does on NQ. That's what a lot of times the market is doing, especially with when you get SMTs. You can use this on any time frame, this model. Focusing on this, when we have a monthly wick, we have to understand time frame alignment is very, very vital. And I'm just going to focus on the monthly time frame alignment. Now the monthly time frame alignment goes from the daily, and then the daily's time frame alignment goes down to the hourly, and then the hourly's time frame alignment goes to the 5-minute, meaning they're all synchronized time frames. Okay, if you want to trade a key level, and if it's on a monthly basis, you want to focus on structure on the daily time frame and entries on lower than the 1 hour to the 5-minute. And I'll give you an example on this. So we can see that we tapped into the monthly level. We can see now, once we did tap into that monthly key level, the market created an engulfment candle, pure, and a CISD. Okay, a change in the state of delivery. A change in the state of delivery is when the market moves from bearish flow order flow to bullish order flow. Okay, or vice versa, but order flow is about to change. Okay, and we've created an order block. The CISD is basically an order block. Now in this case, we can see if this downwards candle is our order block, we can now use the Fibonacci and do the same thing as I did on the weekly wick and mark this out from using just the body, the high to the low. And again, we have your levels. We have the upper level and we have the lower level. This was 30th of July. We then, the following day, traded below, came into the upper level. Notice how we started pushing higher from there. This shows rejection from the upper level and shows more bullish prices. Okay, we also had a daily fair value gap which got inversed, meaning again prices going to be pricing higher. Okay, So these 2 days, or the next day, will most likely going to be bullish. Okay, your bias should be bullish for the next day. Okay, so as I was mentioning, time frame alignment, we have a monthly level coming back into this daily order block, and we can see right here. Okay, so these two would be my daily levels. From there, I'd go down to the hourly time frame. Okay, I'll just focus on this, and we can see right over here. Okay, if I just bring this in, the market essentially provides you with an entry right here, but you still don't have a daily confirmation that we're going to go higher. Okay, market then breaks structure on the hourly time frame right here. That was the daily CIST, and the following day, where people are thinking that they've missed out on the move, the market comes back and provides fair value price. Okay, it comes back into this upper level right over here, and you can see we've also got an hourly gap. This essentially could be your entry, especially this rejection. Okay, and look how I'll further go into this. Okay, we can see we've got a massive rejection block. We can even go further down and get our Fibonacci, and look how we respect the 50% level of that. Okay, of this. So you could essentially have your buy limit, or essentially buy at this level and your stop loss there, because why? Essentially, that is your that is basically a protected low. You can look for SMTs or anything along those lines as well, but we can see that upper level has been tagged in as an order block and a fair value gap. You can't ask for anything better on there. You can now even go further. Remember, the hourly has a further time frame alignment, which goes down to the 5 minute. Okay, so now we can look for 5 minute structure. Okay, so here we can see price traded into this upper level. The 5 minute starts showing as a doji candle, then we start getting rejection. The key information we can see when changing state of delivery from here is the fair value gaps being disrespected. Okay, and then the market disrespects another fair value gap. Essentially, you could enter these positions, but this is where time comes in, and you can see at 11:30, this is a macro time, the market trades into this small little gap and also this inversion gap, and then starts pricing higher. Okay, and it just becomes like a footstep ladder. Okay, starts pushing higher in that process. So we can see that this would be your first entry after confirmation on your daily time frame. So notice how I framed my trade idea from just a monthly level. Okay, and we tapped into that. Then we go down to the daily as confirmation. Of course, we need to have confirmation. Okay, and right over here we had our confirmation. Okay, with this candle, this bullish candle, this big blue candle overlapping the previous bearish candle, downwards candle, overlapped it, closed above it, creating a CISD. Okay, now the following day we wait for our confirmation. Our bias should be bullish on this day. Okay, we could wait further, of course, but because as I said before, the market tapped into the upper level. But over here, we can see that this should give you enough confirmation that the market is bullish. Okay. Then, as I mentioned to you before, we have this rejection from this level with 5 minute gaps and 5 minute entries, and that's your trade idea. Okay. So now, what's our next key level on the daily time frame? Okay. And I'm not including any of the charts such as NASDAQ or even SPY, for example, because there is further, we could say further confluences on those charts. You can definitely add further confluences on there, but let's just remove that for now and keep it simple, as I was mentioning, daily time frame, and from there. So we had all-time highs over here. You don't know if the market is seeking all-time highs. It could come back within the range. Okay, we can come back within the range, or we come back into 50%. But what we can understand is we have now closed above 50% of the range. Okay, this is indicating that we're going to go even higher. Okay, and the next target should be this level here. Okay, we have buy side at this level, which is a swing high. A swing high is, of course, buy side level. So this is our eye should go over here. Okay, because first of all, we've closed above the upper level on this order block and inverse this daily gap, as well as the 50%. We don't know if it's going to trade up to all-time highs yet, but as we see, what's the next level around here? So I'm going to just let it go. Over here, the following day, which was of course Monday, it was the following week actually, we had a gap. This is a new week opening gap. Let's go back to the hourly time frame so we get further information on this. We can see that the market closed right here, and then we opened up here. Okay, so in this level here, there's been a gap. Okay, buy side has been taken on Monday. Then at 9:30, as you can see, we came down. Now, if we go down to other markets, such as if I go back onto choice SPY, okay, if we focus on SPY and if we focus on Monday and see what occurred on Monday, it might have been actually NASDAQ. I'm going to go back onto NASDAQ. Let's go into NASDAQ, shall we? Okay, yes, it was NASDAQ actually. Okay. Again, we had this gap on the NASDAQ. And on the NASDAQ, we can clearly see we have essentially come very close to covering we've covered the full gap with the bodies right here. You can see the bodies have covered the full gap. Okay. Now it all depends on what happens next. Okay. So on the NASDAQ, again, this was on Monday. This is Monday. We've got confirmation that we're looking for higher prices. Essentially, with this hourly candle, we're sticking to our, again, simple daily, hourly, and 5 minute. Okay. We're not focusing on any other time frames. We can see that the gap that was created on the weekend from opening on Monday, it has been filled. Notice how the bodies have been filled. There's no gap there now. We don't know if the price wants to go higher in this moment in time. We have bullish prices, we have bullish bias, but we don't know if it's the right time. However, 9 o'clock occurs. We have the Judas swing at 9:30. Let's go down to the 5 minutes so we can see it clearly. Okay. 9:20, 9:30. We can see 9:30 Judas swing. Price pushes lower. From there onwards, we can start to see price going higher. Okay. We don't need to rush and start buying at this current moment in time. We can wait for the next hourly candle. Okay. So we can see right over here, we have this hourly candle. And I'm going to focus on just this hourly candle here, because we've now had a bullish close on here. This is going to show us that we're going to potentially, this is a signal that market wants to go higher. Okay, we've had a liquidity sweep right over here. CISD occurred. So this is a very bullish candle. So the market has given us the time frame to say, look, we're going higher. So essentially that candle closed there, and right over here, we can see here 10:05 macro. If I zoom in, okay, we can see right here that the market has provided us a fair value gap. Okay, this 5-minute gap. Notice how I was talking about time frame alignment? This is why it's essential to, instead of confusing yourself with what time frame should I look at, what time frame should I need to trade on, focus on simplicity. Okay, and what I mean by that is, again, we looked at the daily time frame, we understood the daily time frame is bullish. What is the structure telling us? We have to go down to the hourly for the structure. Okay, and our entries come from the 5-minute. We can already see, as I mentioned to you prior, that the hourly had a very bullish close. So that means that we are going higher. With understanding ES target and everything, we know this is going to be our entry now. Okay, so essentially this is our entry at the 5-minute gap. Okay, and we enter, and again you can happily take a trade from the 5-minute to the external liquidity or London high or a session high. Okay, but we know where price wants to go. I do want to also add, this is for more advanced and intricate traders, and traders that trade futures that can go on to the lower time frame. If I focus on this 5-minute, we can see over here that the 5-minute is a structure. We can also go further down to the 15 seconds as time frame alignment. This is very precise information, very precise details. We can see we had a turtle soup of this low, and then the market started pushing price high. You can start to see structure changing on the 15 second, and you can potentially find entry requirement. You can potentially find entries on the lower time frame, such as the 15 seconds. Now, this is only if you're used to lower time frames and if you are capable with lower win rates and more precise entries. But we can also see over here we tapped the weekly open, so this was a very high probability setup in regards to the market providing us bullish momentum and support at these levels. I do look at this market as support and resistance, and yes, I look at it in a different format, and many support and resistance traders just look at highs and lows, but I look at it in very quadrant based and algorithmic based support and resistance. So I'll go through that further down the line, but yeah, this obviously now should potentially be where you would have entered in this position if you essentially. Okay, so let's go back to ES and focus on that for now. I'm not going to go into QQQ or SPY, even though I do use that a lot, and there is a lot of high benefit to it. Okay, so as we see over here, ES did not cover the new week opening gap. This potentially shows us even further signs that ES is the stronger pair. Now I had these rejection blocks marked out. Okay, so that those rejection blocks are, again, I'm just going to find what rejection blocks these were for. Okay, so this is for the upper level of the rejection block. Okay, that was the monthly time frame. Okay, so let's carry on and see what occurred. So you can see there was no 1 hour entry over here. This shows us further how bullish we are. Now, essentially, you'd be done trading because it'd be the following day, or you would have entered at a lower position and gone from there. You would have used NASDAQ as your entry confirmation and gone from there. All this information derives from just using time frame alignment, from the fact that we've gotten used from daily levels to the monthly levels, to the day levels, to the hourly, to the 5 minute. Now, yes, we can say the market is in a lot of the market is very smooth at this current moment in time. You can say is very smooth delivery for the past few days anyways. I'm not going to say it's going to be like that for the rest of August, but when it does come to that, when it is smooth delivery, stick to the basics, because that's where you're going to find your bread and butter. That's where you're going to find the best chances. And like anything in life, the market is not about being right all the time. It's just being right on the days when the market's providing you with, clear, obvious chances. Being on the right side of the market, being able to execute and correct risk management. I think that is key in how you can progress, because if you over leverage yourself, or if you burn yourself out at a specific day and you take a few losses and there should have not been losses that should have been taken, then you're going to feel emotionally fatigued and you're not going to be able to capture certain moves and be clear on where the price wants to go, because you're just thinking about the losses that you've taken. So it's very vital we focus on psychology as well. But for me, again, I'm going through this just to re-emphasize on how important time frame alignment is and understanding key levels. So essentially what I was trying to focus on today was more time frame alignment and simplifying your time frames and entry positions and also your key levels. So I'll touch up more upon this tomorrow, and yeah, speak to you soon.